Hey everyone, PK here. So today in this video, I'm going to be talking about the comparison of the Bitcoin or cryptocurrency market versus real estate. Okay, so should you be investing in Bitcoin? It's a very common thing trending right now, or real estate. Okay, so my name is PK and I help people buy high growth, high cash flow properties without using a buyer's agent and dropping 15 grand, without spending the weekends at inspection, and without spending months on realestate.com.au and mainstream websites. So let's get into it right now. So obviously the attraction of Bitcoin is really that, I can buy one Bitcoin, I can put in 20K, which is obviously the market rate at the moment in Aussie dollars, and that might rise to 30,000, that might rise to 40,000, that might rise to 50,000 in 6 months' time, a year's time, and 2 years' time. No one really knows what's going on. If you ask anyone about why Bitcoin has risen from 10,000 to 20,000 in the last few months, or even the last month, no one can really give you a sophisticated answer, but the reality is it has increased. And what that means is that there's lots of people with some money in the bank, right? The government is giving out so many handouts. With everyone in lockdown, there's lots of travel money that people haven't spent. Australia actually has a record high savings rate at the moment. I know it seems very odd because we've just been in a recession. Now we're out of that recession at 3.3% positive GDP growth quarter on quarter. But the fact is that we have a record savings rate in Australia amongst consumers. So people have money in the bank and they don't want to keep that money in the bank because the banks aren't giving much interest rate, record low interest rates. So what does that mean? You either invest it in Bitcoin, you either invest it in real estate, you either invest it in the stock market or various other things. But let's go through Bitcoin versus real estate. And I know that right now it's tempting to buy Bitcoin because it's just risen from 10G to 20G. And so many people, your friends, your colleagues, your family members may have surfed that rise, and you might be looking at them a little bit envious. What if I had put in 10K a couple of months ago? I would have made 10K just like that. All right, so let's get into it. Let's really dive deep into how you can make money in Bitcoin versus real estate, and where you really should be putting your money into. Okay, so the first thing is leverage. I'm going to talk about 4 things. The first thing is leverage. So here we go. Now, the thing with Bitcoin right now, the cost of a coin is about $20,000 Australian. Okay, so if you want to buy Bitcoin, you can't buy half a Bitcoin, you can't buy a quarter, you have to buy the whole thing. So what you need to do is you need to outlay $20,000. All right, and of course you're thinking that, let me buy a couple of Bitcoin, 2 Bitcoins, $40,000, and that might rise to $80,000. Okay, that could happen in 2 months' time, in 6 months' time. I don't want to miss out on that, right? But here's the thing. In property investing, that is just common, all right? So let's analyze a deal that actually a client did very recently, okay? So bought a house at $400,000 or thereabouts. It was in Adelaide. And for that, he needed a 10%, or just around a 10% deposit, including all transaction costs, right? So he got a pretty high LVR that allowed him to get into that property for around $40,000. So the equivalent of 2 Bitcoin. Okay, so he bought that house at the start of the year. Everyone is screaming from the top of their rooftops that the housing market is going to collapse in COVID, right? Everyone, including CBA, ANZ, NAB, Westpac, all the majors, all the miners, everyone is saying that the housing market is going to drop by 30%, by 20%, by 10%, by 4%, different people saying different things. The reality is that this client who bought with $40,000 cash, a $400,000 property, is now sitting on that property worth $445, or let's say $450,000. Okay, now I'm not saying everywhere in Australia rose that much, but this suburb that he found using data definitely did. Okay, so what does that mean? So what that means is that he's taken that $40,000 of cash, of, you could say, deposit, something burning a hole in his pocket before because it wasn't earning him any money in the bank, and he's basically achieved 100% return on investment. We're sitting here in December. I think he bought it in maybe March, February, April, somewhere around there. So call it 8-9 months. He's made 100, it's actually a little bit more, but let's say 100% return on investment on $40,000. Now let's compare that with someone who bought 2 Bitcoins in February or March. If you bought 2 Bitcoins in February or March or April, they would have been around 10 grand each Australian. So you would have outlaid $20,000, and now you would have been sitting on $40,000, okay? So it's actually the very similar return on investment. Or let's say someone bought 4 Bitcoin. Okay, so that's 4 coins, $40,000. Now that person would be sitting on $80,000. That is the exact same return that the real estate investor got. The only difference is that the real estate investor is going to continue to achieve those gains. Whereas, what is the likelihood? And I know there'll be people that say that Bitcoin will continue to go up, but what is the likelihood that Bitcoin will now go from 20 to 40 in the next 6 months or the next 2 years or the next 3 years? It could happen, but it's very unlikely. Whereas this investor in Adelaide, that is exactly the type of result that he can expect to achieve. So the return on investment is basically the same. However, in real estate, it's sustainable, where in Bitcoin, it's not. And the difference is leverage. Okay, leverage. In real estate, you're using the bank's money to get ahead of the game. And this is the same is true in the stock market as well. The stock market on average grows by about 7% a year. Real estate grows by about 7% a year. The only difference is in the stock market, a margin loan, you can take out about a 50% LVR. You can leverage up 50%. In the real estate market, it's very low risk to leverage up 80, 90%. So which wins? Every day of the week, the real estate market wins, if you know where to invest. Now the second thing, so the first thing is leverage, same ROI, but real estate is more sustainable because of leverage. Now the second thing is risk. Are you prepared to put in $40,000 right now to buy 2 Bitcoin? Now, 9 times out of 10, the answer will be no, because everyone knows it's high risk. Everyone knows that no one really knows what's going to happen with Bitcoin. Whereas with real estate, $40,000 is enough of a deposit to get into a very, very high performing property that is positive cash flow, that is high growth, and that you may even be able to get under market value with some value add potential like renovation or subdivision or something like that. So once again, similar returns, but one is much higher risk, that's Bitcoin, and real estate much lower risk. And then let's talk about passive income. Now, unless you're a teenager looking to make a quick buck, most people, regardless of whether you're in your 20s or 30s or 40s, they obviously want net wealth, but really we want passive income, right? We want an income so that we can not have to work, we can retire, not to sit on the beach, but just to have some, stress-free financial life. We want to be able to have choices, do the things that we want to do. Now, by making 100% ROI in Bitcoin, even if that happens every single year, that is not passive, right? As soon as you sell Bitcoin to realize the gain, then you can use that money to go off and buy a car, but then where's the next year's paycheck coming from? Where's the next year's paycheck coming from? So that's the other difference between Bitcoin and real estate. So Bitcoin, sure, you can make gains, but in real estate, you can make gains plus have the passive income so that in the future, not a get rich quick, 10, 15, 20 years time, you can actually leave your job and have more freedom, more choice to do what you want to do. Okay, so the third difference, like I just mentioned, is Bitcoin doesn't afford you passive income, whereas real estate does. And then the fourth thing is you'll be saying, well, that's all good and well. I understand leverage, I understand risk, I understand passive income, but the reason I want to invest in Bitcoin is because it can exponentially grow. Okay, it can exponentially grow. You've all heard the stories of folks who bought Bitcoin 5 years ago or 10 years ago for like $100, and now that $100 is $20,000. And if you bought 10 Bitcoin, you're just rolling in it. That's called exponential growth, not linear, but like this. Okay, so that might be the reason that you want to buy Bitcoin, to say, well, I just want huge, like fantastical growth. The thing is, you can get that in real estate as well. Yes, the real estate market grows by about 7.25% on average in the last 35 years. Maybe that'll happen in the next 35 years, maybe not, who knows? But let's say it does, you're probably thinking that's not exactly exponential. That's flat, linear. But here's the thing. If you actually know how to manipulate and how to strategize in your portfolio setting, you can achieve exponential growth. And this is how it happens. You buy one property, $40,000. That grows up to, let's say, $100,000 in a few years' time. Not up to $100,000, sorry. You've got $100,000 of equity in that. You bought for 400, now it's worth 500. You take that equity out and you put that in another 1 or 2 properties. Okay, so now you've got 2 or 3 assets that are all growing, provided you know what you're doing. And then in, let's say, 4 or 5 years' time, those 3 assets, you've pulled more equity out and you've got another 3 properties. So you see how you're not increasing one by one, but you're increasing exponentially. And the thing with property investing and the way that property economics works is that the more assets you hold, the more exponential growth you're achieving, because your initial 40,000 is now compounding. It's allowed you to hold 3, 4, 5, 6 properties. All of them are positive cash flow, so they're not actually costing you anything to hold. And because all of them are, let's worth on average $400,000, the market, when it increases 7%, that's 7% on all of these $400,000 properties. That is exponential growth off your initial $40,000. Okay, now I know I just make it sound very easy. It's not. It's actually incredibly difficult if you to do it properly, and you really need to know what you're doing. But it's not the fact that only Bitcoin can give you exponential growth. Real estate can too. It's not going to allow you to retire in 5 years' time, but in a passive strategy, 10 to 15 to 20 years' time, you can get that exponential growth. You can get that passive income. You can get it in a low-risk way, and the secret is leverage. So you can see that I'm biased, but every day of the week, if I had $40,000 to spend, I would buy a high-performing, positive cash flow, high-growth property instead of buying 2 Bitcoin. Of course, if I had $100 to spend, I'd probably buy an alternate currency, like one of these small ones. But yeah, that is the pros and cons. Well, I didn't even talk about many pros of Bitcoin, but that's the difference between Bitcoin and real estate. So if you have $40,000 burning a hole in your pocket, think twice before putting it in Bitcoin. You can lose all of that, whereas in property you can't. In property you can leverage, in property you'll get passive income, in property you'll get exponential growth, and property is low risk. Okay, so hopefully that's just allowed you to alleviate some of the fog, some of the misunderstanding about buying Bitcoin versus real estate. And let me know, are you buying Bitcoin anyway? I'm happy if you are, or not really, don't really care, to be honest, but let me know in the comments what you prefer, Bitcoin or real estate. Okay, I know there will be some Bitcoin connoisseurs or Bitcoin enthusiasts that will buy Bitcoin anyway, and there's nothing wrong with that. But let me know in the comments whether you prefer Bitcoin or whether you prefer real estate, Australian residential real estate. Okay, so once again, guys, my name's PK, and I'll leave a link right below as well, so you can find out how to get started in real estate safely, securely, with leverage, with exponential growth, with passive income in a low risk way. So give me a like or love if this resonated with you, and that way it'll find its way to more people. And of course, leave a comment below if you have any questions or comments. All right, guys, have a fantastic day. See you later.